Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Start of a fresh week, Monday morning. I'm Prashant. With me, my colleague Nigel. Nigel, hi. Morning.
Hi, morning, Prashant. There was a somber end last week, with the Rupee and focus. But hopefully things recover from here on. Global markets pretty okay, I think so.
There was that much-needed bounce in Wall Street on Friday.
Yes.
And I think we pick up from there. So let's take it from the top with regards to where we are set up as we begin this fresh new week, right? And I'll start with, of course, the big overarching themes, which I don't think are very different, which is, of course, AI skepticism, which is still the dominant driver for markets, is the big debate point. And actually, it's too tough a question to get answers to. I mean, the simple question is whether all the investment which is going into AI and building out AI infrastructure, is there tangible return at the end of the tunnel? At what point does that end of the tunnel come? And what is the return? I mean, all those questions remain unknowable, I guess, at this stage. But it's because stocks have done so well and has gotten so extreme, there is worry. Now, apart from the return on investment questions, markets are also doubting who the winners will be, right? So think about it. So far, the clear answer, the clear sort of response used to be, it's the OpenAI ecosystem, NVIDIA, OpenAI, and the other players, which the market has bid up very, very high. Last week, Google launched Gemini 3. And, immediately it topped the charts in terms of performance against ChatGPT, etc. So what that does basically is it elongates everyone else's product cycle, because now they got to better this one. It means more capex, more investment, and that elusive ROI becomes even more elusive. I think it's an important point. The market has been concentrated on the OpenAI ecosystem, and suddenly you've got this Google Gemini 3, which has kind of shaken things up. So that's the other point, new thing, which I think we'll talk about as we go forward. The number two reason, AI is one. The number two reason, of course, the Fed, right? Now, I don't know why the December Fed rate cut matters so much. Whether the Fed will cut or not in December, it's 50-50 at this point in time. But it seems to, right? And the Fed, of course, has been, the September jobs data is too old. We got that. And we won't get the next jobs number, which will be bunched up. We'll only get it after the December decision of the Fed. And we will have a decision by then. But in any case, I mean, I think these are two big reasons, two big factors at play at this point. Now, just to touch upon the price action on Friday, S&P was up 1%, Nasdaq bounced about 0.8%, the WIX fell about 11%. And at the margin, what helped basically were two things. One was dovish comments from Fed's Williams, which helped equities. He basically said, I fully supported the earlier rate cuts, and I think there should be more. And there was also news at the margin that the Trump administration was considering allowing NVIDIA to sell the H200 chips, semiconductor chips, to China. Remember, China has been shut out. In the conference call, Jensen Huang, the CEO of NVIDIA, did not even mention China once. But that's a market which is basically, being a big booming market, has gone to zero for NVIDIA. And this, of course, at the margin helps. It's a big market for chips. Oracle was down, and I'm just talking about Oracle because, again, this is such a big AI trade. It was down 6%. For the week, it was down 11%, and it did not recover along with the rest of the market. And that kind of highlights that this question is still there, the broader AI-related concerns. The question, of course, as we head into the end of the year is simply this, right? You had a good year. Some of the sheen has been taken off in the last fortnight or so. Will investors want to take more tactical risk and go into the end of the year with some profits in one's pocket? So will they kind of go into P&L protection mode? Or, I mean, is it going to be once again the revival of that entire risk cycle, risk sentiment in that sense? Macro markets were quiet. 10-year yield was down 2 basis points. Oil prices 1.5%. And on oil, the new thing, of course, is that, actually it's new in the sense that, well, it's come back once again. Trump is putting immense pressure on Ukraine to accept a U.S. brokered peace plan to settle the war with Russia. And a lot of it's facing humongous backlash and criticism from European countries. But Trump apparently has given a deadline to Ukraine. That is the 27th of November, later this week, to decide what they want to do. So this is another story which is important to track. The war, of course, has gone on for 3 years now. Levels, I'll just tie in support levels, nothing more at this stage. So the 20-day for both the Nifty and the Nifty Bank remains supports, as we've been highlighting for some time now. The 20-day for the Nifty has moved up to 25,844. The 20-day for the Nifty Bank has moved up to about 58,305 levels. This is as of Friday's closing level. GIFT Nifty gives you a quick sense of where we're likely to start, and we'll pick it up from there. 85 points higher is the open today. Nigel has walked across with the FNO positioning and the lay of the land there. Nigel, over to you.
Well, what spooked the markets in Friday's trading session was the kind of spike that we saw in the Indian rupee in the final hour of trade. You know, there was that fear that maybe, in fact, the RBI has stepped aside, that trade deal that we were waiting, that's got pushed back a little bit, and maybe some outflows as well. So that was a bit of a concerning factor. You'll want to see some kind of stability on the money market with regard to the Indian rupee. So hopefully that takes place today. And in fact, the hope is that we see that rate cut in RBI. Hopefully the rupee doesn't weaken too much, because that could put a bit of a jitter in terms of that rate cut as well. So that's one point. The other factor is that, yes, we were down in Friday's trading session. The India VIX did spike up more than 10%. It's a while since we saw that kind of a spike out there. But for the week itself, the Nifty actually was an outperformer. And for the month of November, the Nifty actually has been an outperform. We were making this point, so 120 points down, but the global markets did see a sharper cut. So India did outperform. One of the reasons that we did end under pressure was the FIs. They had reduced their selling, their turn mile net buyers. They sold yet again, close to around 1,800 crores odd. That was offset by the DI buying, which pumped in close to around 3,200 crores. So the institutions, they net bought close to around 1,300 crores in Friday's trading session. What did the FIs do in the FNO market in the index futures? Well, they went ahead and they added some short positioning. 2,700 contracts is what they added. 88% of their positions are on the short side. And keep in mind, tomorrow you have the monthly expiry that will play out as well. So that's the way the FIs are set up on index futures. This market is still a heavily net short market. On the option side, well, they wrote more calls. You know, in Friday's trading session, after a while, you saw call writing. 80,000 contracts were written out there. And earlier in the week, you saw a lot of put writing. There was some unwinding of those puts that were written earlier. And the PCR that had moved to around 1.5, which is towards the upper end of the range, that's cooled down to around 1. Because the call writers came back into play. 26,200 call, 26,100 call. Aggressive writing is what we saw on both those two strikes, which caused the PCR to cool down a little bit, which is not such a bad thing. Now, punching in these levels, the technical levels, as well as what the options data is suggesting, in the near term, the 20 DMA becomes very, very important. You know, if we protect that on the downside, the bulls will say, well, we have some unfinished business at higher levels. So that 20 DMA becomes crucial on the Nifty itself. The recent high at around that 26,250, that becomes the near resistance level. So that's the broad 400-point range that I'm working with. The Nifty Bank will have to lead the way. It's lost, it lost a little bit of ground in Friday's trading session, but that's still comfortably above the 20 DMA, close to around 700 points away from those levels, 600 points or thereabouts. So that's the one that will have to lead the way. But we've been making this chatter about the Nifty moving to all-time highs, the Nifty outperforming. However, the broader markets haven't participated, which is the bit of an issue. Just look at it, a clear divergence out there. The small cap index, in fact, is still down 2.5%. So 3% underperformance is what you're seeing the small cap index. You'll want the Nifty to chug along, but gradually portfolios will feel good when the small cap index and the mid cap index catches up. So we'll keep an eye out on that catch-up trade as well.
All right, no, absolutely. And the more on this as we go along, but we'll build on this. Nigel, thanks very much for that.
But anyhow, I think the world's feeling slightly better, because the hope is that after that commentary that we had from the New York Fed president, that indeed that rate cut will be delivered like a December goodie around the middle of the month. And that's showing up in a lot of the Asian markets which are trading. Japan's shut. The ones that are trading are positive. Let's quickly pull up the implied open, the GIFT Nifty, and what that is suggesting, whether indeed our market will keep marching on smartly above the 26,000 mark. And yes, indeed, that's the indication right now. So let's see.